Shaily, thank you for joining us today for this discussion.
Glad to be here.
Shaily is head of products at Tata AMC. She has over 18 years of experience in the financial sector. In today's episode of Market Makers, we are going to discuss with Shaily about India's growing tourism sector as well as Tata Nifty India Tourism Index Fund. Shaily, let's start with some basic questions.
Sure.
So Shaily, what are the main objectives and vision behind launching the Tata Nifty India Tourism Index Fund?
So Indians are increasingly traveling India. Our pride in India is also increasing along with the GDP. People are more curious. They want to know more about India. That's one phenomenon. Also, the middle income group within India is growing, and that's having a rippling effect on multiple areas of the tourism sector. Added to that, the government is also doing a lot of advancements on infrastructure, number of airports that you see, or the number of kilometers on roads and highways that we see, and alongside the airlines are expanding their fleet rather and making affordability of travel a very, very important phenomena again. So with that, we are seeing a burgeoning rise in the number of people traveling. Actually, 99% of the people who travel are Indians traveling within India. Only 1% of the people travel abroad. So the domestic travel is the largest pie. Indians traveling abroad or foreign tourists arriving in India, that's a small piece of the pie. In FY23, approximately some 14 crore people or 14 crore Indians traveled within India, which is 160% rise from the number in FY21. If you see these percentage growth in the inbound and outbound travel also, that's also quite huge in 2023 over 2021. To add to that, the number of trips which Indians have made within India are expected to rise from 2,300 million in 2019 to about close to 5,000 million trips by 2030, which is almost double. So in this background of growth, we thought we should capture tourism as a segment and as a theme.
How does this tourism index fund differentiate itself from other sectoral funds? What are the things that make it unique?
In the tourism portfolio, if you were to zoom in and look at which are the sectors covered, you would have about 65% allocation towards consumer services, 3 to 5% is about luggage, close to 30% is airport and airlines, so airport services and airlines. And in any diversified sector fund, if you were to see these segments either individually or put together, would not have more than 5 to 12% allocation at one go. This fund is zooming in on particular segment within the consumption sector. It's zooming in further on the consumer discretionary segment, which is tourism related.
What kind of companies are included in this particular index, as well as among those segments, what are the trends that you are seeing in India?
So within this, under the consumer services, you have about 30% allocation to hotels and resorts, 20% is towards airlines, another 10% is towards airport services, and you have 20% towards restaurants, 3 to 5% towards luggage. So these are the sectors or subsegments which are present in the index currently. If you were to see the trends, unexplored travel to unexplored destinations is increasing. It has increased by almost 30% in the last 2 years. Searches for homestays and villas, that has risen. Travel to tier 2 and tier 3 cities, that has seen a rise. Weekend getaways, those have seen a rise. Actually, previously it was just an annual holiday, that was the concept under travel, but now you have long vacation, short vacation, weekend getaways, you have road trips, you have spiritual tourism, you have medical tourism, you have workation, staycation. So there are multiple formats of travel and tourism which we are seeing currently. That is one trend which is actually emanating. In fact, the number of trips, 3 trips per year, that this trend has actually grown by about 25% over the last few years. Multiple trips within a year and these various formats That's one trend that we are seeing. Also, people want to spend more on experiences and gathering experiences. They want to feel new emotions as compared to just buying material things. All these, when you travel more, when you book more hotels, when you use more of airlines, and you use more of luggage, all these have effect on the sectors which are housed in the tourism index.
And you're right, I do recall कि 20 साल पहले, we used to have like an summer vacation or maybe a Diwali vacation, but now in addition to those vacations, we are also looking for, other travels like or trips like weekend getaways and staycations.
Garmi ki chuttiyan has now moved to multiple other
Round the year.
formats. Yes.
And we are looking forward for long weekends also.
Yes.
So, Shaily, what criteria is used to select companies in this sector, and how does it ensure diversification?
So all the basic industries, all the sub-segments under tourism theme, they are identified and they are pulled out, and stocks under each of these sub-segments, as we call it basic industries, they are taken together and listed, and then they are arranged in a descending order of free float market capitalization. And maximum 30 stocks can be part of this index. At one point in time you can have maximum 30 stocks. So descending order of the stocks which qualify under the tourism theme or those basic industries, arranged in the descending order of free float market capitalization, and per stock there is a cap of 20%. So the review and rebalancing also happens regularly. For example, in this index the rebalancing is every quarter, and the review whether any new stocks need to be included, excluded, that's semi-annual. That takes care of if there are new listings which need to be included. This review takes care of that, and the quarterly rebalancing actually takes care of any of the stock breaching the 20% stock cap. So that brings in diversification and access and exposure to all the sub-segments and with meaningful weights. So that's the idea.
So essentially what you're saying is this fund would have maximum 30 stocks at any point of time, with not more than 20% weightage to any particular stock, and a rebalancing or review would happen every quarter.
Every quarter rebalancing.
Okay.
Yes.
And you were mentioning about sub-segments like airlines. Which other sub-segments are included in the fund, in the index?
So hotels and resorts, that's about 30%. 20% is restaurants, because the QSR, quick service restaurants, and the eating out trend is also catching up. People want to socialize, the women workforce is increasing. So all that is leading to a rise in this restaurants and QSR segment also. So 20% is allocated there, and 20% is towards the airlines, and 10% towards the airport services, and 3 to 5%, as I said, is towards the luggage companies. So these are the other sectors included.
Got it. And what kind of investor profile best suits this particular fund?
So this, in fact, every investor should be buying this fund. Yes, this is a thematic fund. However, the cyclicality element to this is not as much as it would be in a capital goods segment or a sector. Yes, this is zooming into a consumer discretionary, but the cyclicality element is not as high. So the risk reward proposition of this thematic index fund would be higher as compared to a diversified equity fund, for example, because this is a thematic fund after all, and the investors can adjust their percentage of exposure, depending on whether it's a moderate profile, risk profile client or an aggressive risk profile client. The percentages could vary some bit here.
As a fund house, what is your outlook on India's tourism industry?
So we feel that there's a long runway for this. India's demographic dividend is very much there for us to capture the boom in tourism. As the GDP per capita rises, the incremental spending on tourism is likely to rise, and more would go towards these sectors like travel and hotel stays and eating out in restaurants, and enablers like luggage and kinds. The middle income group growth which is currently I think it's about 31% of the population, and it's expected to go to about 47% of the population by 2031. And this rise will have a rippling effect on many parts. First and second, AC rail travelers moving to becoming first time airline travelers, or we seeing a lot of increase in hotel bookings. We seeing people using infrastructure and driving to weekend getaways closer to the metros. That trend is also quite catching up. So various metros, there are in the Make My Trip reports, you would see there are various destinations listed closer to the metros, which are actually seeing a lot of rise in searches and bookings itself. With all these and the GDP per capita rising, reaching about expected to reach about $5,000 by 2030, and I think that is something which would support the growth of tourism sector in India.
Okay. So finally, is it right to say that within the larger India consumption story, tourism could be one of the sweet spots?
Yes, we can say that. Overall, the demographic dividend definitely supports the entire consumption boom, which is there in India, which is what, and the longevity of that growth. One is growth and the longevity of that growth. This segment is actually zooming in on one area within the consumption sector, which is the consumer discretionary. And yes, we are expecting, or we see that as a long runway for growth with relatively predictable earnings growth as well.
Thank you, Shaily. Thank you for taking out time for this discussion.
Thank you. Our pleasure, totally.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.